Yeah, this a hit right here, Zay.
Hey, what's up, everybody? I just wanted to hop on here, kind of do a midweek review, essentially. Kind of go over some of the ideas that we've taken thus far, and a little bit of like before and after effects when it comes to the analysis that we've done since Sunday. The Discord was aware of most of this stuff before it happened, and the direction of basically the market and where my targets were on Sunday. The free Telegram was also aware of, right? And then of course after we sent a bunch of markups in regards to different scenarios. But essentially we caught buys and sells anticipating this specific move to occur. We caught buys going into this area, and we also caught sells coming out of it, attacking these equal lows down here. Okay, so these are equal lows. At this point in time, before this pullback happened, we were aware that this was potentially going to happen, and these obvious equal lows were going to be the essential target. Okay, but yeah, so let's actually go to Telegram real quick just so we can pull this up. As you can see, this chart, the screenshot was taken on April 24th before any pullbacks occurred. This, as price was pulling up, we said I'm looking for the new low portion of this fair value gap to potentially be pushed into rebalancing this FVG and a bit more before we see another drop attacking the lows at 13,000. Okay, which we had outlined before the fact as targets as well. Okay, so we're gonna jump into essentially some of the frameworks and different opportunities that presented themselves, along with how to frame certain things on those lower time frames when you have an idea like this. Assuming that you figured this move was going to happen, right? So we get started, right? Price, when we first looked at it, assuming that we were going to see this drop, we saw this one bearish candle here. Okay, seeing that there was a bullish order block right here, that's a reasonable area to expect a retracement to initiate. From that level. We're also at a discount, right? From this low to this high, we were at a massive discount. So to be able to catch this move going down, we have to be aware of what could potentially happen and what can lead up to that, right? So with that context being there, right, which is what we used on that prior screenshot I just showed you on the 24th, let's drop down to the lower time frames. Okay, so on this 1 hour chart, that full bearish candle we were just looking at, in that screenshot, it would have been this leg here. Okay, so when the week started, right, let's rewind real fast. When the week started, remember I had the targets of 13,000. Okay, and the reason being is that's right before those equal lows would have got taken, if there was in fact going to be an attempt to get below those equal lows, right? But when Sunday started, right, we could see the price, as it normally does. Sunday consolidates a lot of times and doesn't really do much, right? But then after that, of course, right, we had this whole candle, which I assumed from that bullish order block we outlined on this daily chart. Let's go back. That bullish order block, we pushed into that when that week ended last week, right? Or when it ended last week and started opened from here this week, right? So we anticipated this bullish order block sending price a little bit higher to come and rebalance this fair value gap or this imbalance that was created. Okay, so with that being said, in the moment, right, looking at this 1 hour chart, we could reasonably assume the price is going to be bullish short term because of the logic we just outlined, where it's going to bounce from that daily order block to come and potentially rebalance, you know, the last imbalance from this last week, right? So the bias on Sunday and Monday would have been bullish like it was. And we also, you know, I made the recording as well, showcasing the buys that I took, which you can go, you know, jump into and, you know, observe alongside this explanation and some of the markups. But essentially Sunday, Monday, we were anticipating some form of consolidation and manipulation for the weekly range power 3. Okay, so we're going to play this out. All right, let's play this out. Let's go to right there. All right, so this daily chart, or this 1 hour chart on the daily chart, was going to present the pullback that we were anticipating, right? If we would have got above here, we would have looked for bullishness, and we could have seen this, consolidation up here. Could have seen this consolidation as a market maker buy model framework, okay? Because here would be the original consolidation. If we did end up being bullish, right? Original consolidation. This right here would have been the first distribution, and this would have presented a smart money reversal, right? If this would have got taken out, that would have been the framework for the buys that I would have, you know, participated in. But I already assumed it had targets and certain frameworks aiming for those, you know, those equal lows. Okay, so put that to the side. But yeah, so as Sunday and Monday presented itself, right? Our Sunday's open price, you can either do like the open right at, you know, the open on Sunday, but a lot of times the best place to put your reference point is at the 2 o'clock time on Monday. Okay, so yeah, like basically a little bit into the London session on Monday, right? That's, you know, so 2 o'clock Pacific Standard Time is the reference point that I utilize for Sunday's open price as a reference to the weekly Power 3 profile, right? And outlining that. So when Sunday happened, I don't trade Sundays. A lot of times I don't even trade on Mondays unless there's something clearly showing itself based on the logic that I plan out on the Sunday analysis, right? So seeing how this happened, we were anticipating consolidation, then some form of manipulation to present us the high of the week because of our bias being bearish. All right. So once price shot up and broke this swing high, right, we can go down to these lower time frame charts to frame out what our buy opportunity would have been, pushing into, remember, that imbalance that we saw on the daily chart from that bullish order block, right? Let's just reference that out real fast so you guys are totally clear. Right? Color on this. But yeah, all right. So that being said, that was the framework for the Monday or Sunday and Monday assumption of what we were going to potentially see for a continued move lower, right? And if, you know, I'll speak on something I was going to tell you guys a little bit later, but yeah, so knowing that this daily order block was going to be the instigator for a potential move higher to come and rebalance this imbalance, when we got price moving above, I believe it was around, yeah, right in New York session. Once we saw the new YouTube model performing, right, just to keep things very simple, you know, for all of you guys that are following the YouTube model, that's what this is going to be centered around. We could dive into other perspectives and different additions to the model. You know, if you guys want that, definitely let me know in the comment section if there's anything specific you guys would like me to go over. But like I said, knowing that price hit this daily order block, when we were trading on Monday, our assumption would have been what? Our bias would be bullish for the day because we're looking for price to come and rebalance the imbalance that was created from the previous week, right? Our targets, like I said, are going to be those equal lows. They were those equal lows, and the whole number 13,000. Okay, so when this occurs, right, when this consolidation on Sunday happens, and then we see a nice push higher, right? When we see price break above this fractal high on this 1 hour chart, if you want to use the 1 hour chart, you could start going in there and looking for your play, right? And your play would be centered around a retracement into the daily fair value gap for a continued move lower. Okay, but we were buying into that. So let's go to the lower time frames real fast. So on this 15-minute chart, we can see that the most recent fractal high after a run on liquidity on Monday, using the frameworks that we had on that daily chart in regards to bias, we could see that after this stop run here, right, it was a very small stop run, but nonetheless, another thing, the other indices at this time, the S&P and the US 30 were showing higher lows, while Nasdaq showed a lower low, all inside this daily order blocks zone, essentially, and to the midpoint of that, right? So as price broke above this first fractal high here, where is the model for a potential buy? I'll let y'all sit here and kind of think about it for a minute. Can you see the new YouTube model performing in this example right here from Monday's trading? Right? If you can see it, right, we're going to outline a couple of things. So, those of you that can't see it will now see it. Okay. So us giving this nice push higher, okay, that was a nice push higher, ended up breaking these swing highs after sell stops were ran in New York session, okay, the start of New York session around 4 o'clock up until 5, right? Once that is broken after the sell stops were taken within this daily order block, okay, this daily bullish order block, with an assumption that we were going to come and rebalance this imbalance from this previous week. Once this broke above that high, that is where we would potentially look to buy, which is where we actually bought in the video. Okay, that's from this day, the 25th. Okay, you can go review that, right? But outlining this, after the sell stops were taken, this high was taken with the assumption for this pullback to occur. Where would the fair value gap be, right? There's one right here, okay? But then there's also a lower one. We go down to these lower time frames. We can see that there was one right there, okay? There was this lower fair value gap right there, okay? You guys, I hope you all can see that, okay? So price ran down below after breaking these highs, all right? After it broke this specific high right here, you could have also tried to take an entry here at this fair value gap and this order block, this bullish order block, right? So that was like the earliest you could have even considered it, right? But nonetheless, these were also clear, right? Of course, if you'd entered here, your stop would have to be below this low or this very low down there, okay? So depending on what your risk appetite is, you'd have to make that assumption from there, right? But yeah, so the framework for the buys, right? I hope the framework for the buys is really clear, because it's really self-explanatory. Overall bias would have been bearish, as it is, right? The higher time frame directional bias is bearish, right? And what was the target? Those equal lows on that higher time frame. Okay, so these buys would be a counter trend move, which you should consider dropping your risk, cutting it in half, because it's counter trend and you never know, right? Or just sit out if you're not comfortable with taking counter trend moves, or if you're not comfortable with framing things out in this way, okay, to understand the narrative that goes with understanding how to counter trend trade with high probability, right? So when this all occurred, right, ran the sell stops, broke above this high, created two separate fair value gaps. This upper one could have been the entry, but you always got to consider it dropping down lower into that, right, the lower portions, right? But once that occurred, right, and price expanded higher, They came down one more time to come and stop out anyone that rushed their stops here. And then again, the model ended up pushing higher, breaking this swing high with the bias being bullish short term to come and fill in that fair value gap, right, or the imbalance on the daily chart. Once it broke above this high right here, okay, now the model is performing again, right? Give you guys a second to see if you can see that before I point it out. Where is the model? The model performed down here. It performed right here initially. And then once this swing high was broken, is there a fair value gap that you can spot very clearly for the model to perform again to give us higher prices into that imbalance? Right, you guys can see it is right there. Okay, so that would have been another potential entry. Okay, so you missed the first one, these couple ones here, you could have still got in right there. Okay, so there's 3 chances for us to have gotten into the buys, okay, as of right now, right? So there's the first one was down here because it was a fair value gap order block on the lower time frames. After this swing high was broken, this first one here, after the sell stops were taken, there was that first one, second, third chance if you didn't get stopped out or if you didn't participate. And then once this happened again, once it broke this high, with the understanding that we're bouncing from this daily order block, pushing into the higher time frame imbalance. Once this broke above here, the return back into that fair value gap right there, that's also another entry. All right. So with that being said, as price pushed higher and higher and higher, right, throughout Monday, right, let's I'll pull up the AM and PM sessions for you guys as well so you can see that. Have that outlined there for you guys as well. But yeah, the AM session presented, 1, 2 buys to potentially get into, and then the lunch period, which is a no trade zone. But once 10 o'clock came, it ended up presenting another entry, okay, for a continued move higher off of the analysis that we just discussed, okay, from the daily order block, wanting to pull back into the imbalance on that daily chart. So with that being said, when price pushed up, right, this is also another potential entry down in here. These consecutive bearish candles right here. These consecutive bearish candles right here after this or before this big, expansion higher. Once this is broken, these consecutive candles here, these consecutive down candles act as a bullish order block, right? There was a fair value gap here, but I'm pretty sure on the lower time frames you could probably see. Well, no. So there was no fair value gap offered in this idea, but nonetheless, you can see how these consecutive down candles, let's go to the 5-minute. These consecutive down candles on this 5-minute chart, they create a bullish order block. It's a 15-minute bullish order block because remember, 5 times 3 is 15. So 1, 2, 3. These 3 5-minute candles, consecutive down candles. When this high is broken, now that becomes a 15-minute bullish order block on this 5-minute chart. Okay, so price is fractal. So you want to be able to understand, the dynamics between the relationships with the different time frames. Okay, so yeah, once all these opportunities presented themselves, I hope that this stuff is clear right here. If it's not, please let me know in the comments what wasn't clear, so then I can kind of break it down or answer you in the comments and stuff like that. But yeah, once this stuff was already delivered, the AM session created 3 decent opportunities. The PM session created 2 premium opportunities, right? One right here and one right there as well. Let's outline this bullish order block to make it even more clear. So yeah, once this stuff delivered, just because we see price doing this, that doesn't mean now we're bullish. It's just not the case. We got to always remember what our higher time frame narrative is. and work within that on the lower time frames if we're comfortable doing so. Okay, but there's a narrative on each time frame that you need to be able to understand that works inside that daily chart narrative for the higher time frame bias. Okay, so counter trend moves just basically, will come, they'll come easy to you once you understand this kind of stuff, right? This kind of perspective in regards to, retracements and things like that, and then how to work within it and find your model, right? So the daily chart, right? Once we pulled up here into this imbalance, right, on this daily chart, now we start considering moving more into Tuesday. We got to start considering the potential, factor of price now beginning the weekly move that we were anticipating since Sunday. Okay, so when price consolidated on Sunday, manipulated on Monday, okay, which is a false run to just come and rebalance, right? Once Tuesday starts coming around, okay, so there's London. So this is London here. So remember, so the end of the day was here. So the new candle, the new daily candle would now be starting, okay, right over here. Okay, so this would have been this daily candle right here for Monday from 9 o'clock to the end of PM session. That is, or from 9 PM or midnight Eastern to the end of PM session. That created the whole daily candle for Monday. So now the fair value gap would have been even more clear, okay? So now, I don't know why it's not showing, but nonetheless, this candle was created in that time that I basically said, right, from 9 o'clock, 9 PM Pacific time or 12 Eastern to the end of PM session. That was this full candle right here. Okay, that full candle right there, that blue one. So as you can see, the next candle pushed up above it into this now relevant fair value gap. Instead of it just being an imbalance, it became a fair value gap now on the daily chart when this candle closed, this blue one. So as you can see, this one pushed up above it, right? And pushed into that fair value gap for the weekly perspective, right? So when price did that, it punched up above it here. Okay, so that's that wick. This is the imbalance, right? Or the fair value gap, right? That we were outlining, right? So when price came up into there, tapped into that, and then showed some rejection away, okay, with the bearish bias, this now becomes a shift in market structure here, okay? And so, and this is a high, this is a lower high. So we would anticipate after this shift in market structure, another lower high, which would then create this intermediate term high. And if you guys aren't, familiar with this concept, ICT has actually spoke about this in a couple of his videos. I forgot exactly which one, but it has to do with advanced market structure, okay, and identifying short-term structure, intermediate term structure, and long-term structure, okay? So intermediate term high has a lower high to the left and a lower high to the right, and it's filling an imbalance, okay? It's punching into a fair value gap, okay? That high, understanding that, this is a lower high, we could potentially think there's going to be another lower high, and it filled this daily imbalance or tapped into it. This high can now be reasonably expected to be respected, okay, with our bearish bias, okay, with our bearish bias overall, right, being understood, okay. So when price broke down below this, that's one shift in market structure, okay, and this highlighted area is the new midnight candle, or 9 PM Pacific Standard Time, okay, which is the start of the daily range, okay. So let's outline that, okay. So this is 9 o'clock. Or 12 Eastern, okay. It's the opening of the daily range, essentially. The power of it has, this is like the start of the power of 3 for the daily range, essentially. it acts as the same type of reference as the Sunday's open price, but this midnight candle or 9 p.m. Pacific time reference, that's for the daily range power 3, right? That's an opening for the daily range and useful in the daily range power 3. The Sunday's opening price, that has to do with the weekly range power 3. So it's over a longer period of time. This is the reference for like the weekly range, but this is for the daily range, okay, for daily opportunities. All right. So the fair value gap was here, right? Let's mark this. Right. So this is the daily fair value gap here that it punched up into after it created that bullish candle, right? Presenting the buys that we took and just outlined. All right. So once price got up there, we now start looking for where is our run on liquidity. Well, this is a run on liquidity, okay, in London session, right? So this was a run on buy stops, pushing into the fair value gap in a bearish, assumed market, right? We're in a bearish trend, okay? So once price got up there, broke down below this low here, potentially creating this as an intermediate term high. Okay, we can reasonably expect there's going to be more shifts in market structure going into New York session. So the blue is London, the green is New York. Okay, so we're going to play it out. So as you can see, this high after running these buy stops, right, after coming off of this low on Monday, the rally was a false rally for the weekly Judas swing, okay, or manipulation. All right, pushing us into, the low portion of this fair value gap on the daily chart that we were already anticipating was going to be created. Okay, so this high now becomes an intermediate term high. What is the significance between an intermediate term high? Well, intermediate term highs can be expected to be respected. And if they're not respected, that means, you're on the wrong side, or your analysis could potentially be, ending up being wrong. Okay. So what is an intermediate term high, right? An intermediate term high is, any imbalance that gets created or that gets filled, or a fair value gap that gets touched. If we're in a bearish market, the highs that are created pushing into fair value gaps, those can be anticipated as intermediate term highs, which should be respected if we're going to be bearish. Okay, so like we said a second ago, there's a lower high to the left, a lower high to the right, and there's this higher high in the middle that took buy stops pushing into this fair value gap on the daily chart. So that, based off what I just said, creates an intermediate term high that should be respected and trusted to be respected. Okay, if of course our analysis is correct, which it in fact was. So after that's created, we get this low here, breaks down below that low. Okay, this is actually this is like the London opportunity here, because there's a fair value gap. After we took buy stops, after it ran these lows here, this short-term low here, it broke down below that, returned back. Since we think this is an intermediate term high potentially, we could expect that this high is not going to get above here. It's not going to break above there. Okay. And as you can see, that's what occurred. So it broke once. This is one shift in market structure here. Now here's a second shift in market structure right there. Okay. So let's fast forward a little bit. Okay, going into New York. Okay. So let's mark out the 5 o'clock time. So here is the 5 o'clock time. Okay. So as price was delivering, okay, we got this, sell off here. Price came all the way back up into here to run the sellers that entered up here that rushed their stop to there. This retracement was basically to unseat them. Excuse me. Okay, so it unseated them. 1, 2 shifts in market structure. A third shift, right, broke down below here. Then this price action came above, right, or it came as a retracement. Ran these highs, and then we have more shifts in market structure occurring. Okay, so we got shifts right here. Boom, boom, it went down, took those. And then as we're approaching New York session, right, with our assumption that it's going to be Bearish, our assumption that this is a intermediate term high because of it punching into this daily fair value gap that was created between last week's imbalance and Monday's candle. All right, so it punched above there. We're also above the Sunday's open price. So for the weekly power of three, that's why this Sunday's open price is so important. If we're going to be bearish, all the best selling opportunities are going to be above the Sunday's open price for the weekly range. And if we're looking to sell for the daily range, we want to see price get above this 9 o'clock time or midnight Eastern time, because that acts the same as the Sunday's open price, but it's just for the daily range opportunities on a shorter time frame, essentially, right? But this Sunday's open price is still very important throughout the week, right? Because like I said, the best sells are going to be above this Sunday's open price for power of three on the weekly chart. Okay, so with price delivering, this price action here broke, shifted structure here, and then this low was created, which was also ran through as well. Then as we approach this 5 o'clock time, okay, our opening price would be right up in there, right? So that's the New York open price. Okay, that's the New York session open. Equities open, or approaching equities open. Okay, that's the first reference we want to see. So just like with the 9 o'clock time and just like with Sunday's open price, the best sells are going to come from above those reference points. But sometimes it's not going to get above like the 9 o'clock time, right, or 12 Eastern time, right, or hopefully it stays above Sundays, but sometimes it doesn't stay above that either, right, for sells. But in the case that it doesn't get above the 9 o'clock time, you could just use the New York time, the New York open time to get above that as well, which is at 5 o'clock, 5:30. Okay, so that just works. All these reference points are important because of that fact, right? That the best sells come from above these prices or these areas of reference, and the best buys come from below these references, right? Depending on your bias. If it's bearish, we want to see price get above these references for sells. Going into the New York session. And then, of course, vice versa. If it's bullish, we want to see price drop below these times moving into the New York session to be able to anticipate the best entries, essentially. Okay. I hope that is clear, right? Because there's a lot of people that get confused about this stuff, and it's really self-explanatory, to be honest with you. So try not to overcomplicate or overthink things. And like I said, if you guys have any questions about this stuff, it's very, very simple to clear up the questions about this stuff, okay, about these reference points. They're there to use as just that, reference points, you know what I mean? And kind of put you, kind of corner price, into areas that, are high probability for certain things to occur, all right? So that's why these things are important. These references are important, all right? So, in this example too, just a heads up, there's actually no Judas swing that occurs. There's no false rally to get us above these, these prices. It's just heavy, right? So to build your confidence in the fact that we're going to sell and, you can get into sales, understanding how to identify intermediate term highs, right, is basically, the way that you can build your confidence if there is no Judas swing that occurs, which is essentially the ideology that I utilized to be able to trust my analysis that we were going to come down below these lows and come down below the lows on that daily chart as well, those equal lows by 13,000 as the target, right, which it did push through. But nonetheless, you can see there's an intermediate term high here. Why? Because there's a lower high to the left and there's a lower high to the right, right? You could even look right here. When it punched above, there's a high right here. There's a lower high to the left. And there's also a lower high to the right here as well. And then there's one right here as well. And then it's shifted market structure, okay? So this is all indicating weakness here, all right? This is indicating weakness and the idea that, this is an intermediate term high because it touched the fair value gap. We're in a bearish market. There's clear bearish targets. It puts a lot of confidence in your corner to be able to trust your entries, all right? So as we approach this 5 o'clock time, okay, like I said, there was no Judas swing that occurred, right? No clear, obvious false rally to come and attack, buy stops, right, for us to anticipate some form of selling. But what we did see here was this actually ran these highs. So this was actually a run on stops right here. Very light run on stops. All right. But once I saw that, because of time and price, okay, because the time was correct, right? We were in the right time to anticipate some high probability things occurring. Okay. Once price broke down below here, right, that's also another shift in market structure. Okay. So based on this ideology here, right, and I can pull up my executions as well to kind of show you guys where I exactly entered. Almost forgot. See if it'll pop up. Oh. It's very interesting. Let's go pull it back up and view. So this was the 26th. So right here. So from 113 or yeah, 13,394. Okay. 13,394. Right. 13,394. Huh, that's very interesting. That's very interesting. Let me check. Yeah, that's very interesting. I entered on this return to this fair value gap. So I'm not 100% sure why. Yeah, see right there. So 13,458. 13,458. Right there was my entry. Okay. 13,458 was where I entered, which was right here on this return to this fair value gap in there. Okay. When it broke down here, I looked at that as a shift in market structure. We got our intermediate term high up here. We're in bearish conditions. We're anticipating lower prices with specific targets on that daily chart that are equal lows, which is going to be high probability, right? And that 13,000 whole number was the target, right? The overall target, before those lows ended up getting ran through, okay? But when price dropped down here after taking these buy stops, it's a very subtle move, not as animated as we like to see with the Judas swing, right, to get above New York Open, but we were above New York Open right here. So once it ran those highs and broke down below this low, knowing that this is an intermediate term high and this is a fair value gap, I then looked at this high as an intermediate term high as well in relation to, this price swing here. Okay, so this is a daily intermediate term high. This right here, coming back into this imbalance, this high was a 3-minute intermediate term high, which like same with this, right? We expect this to be respected if we're bearish. We also want to expect this is going to be respected as well because it filled this fair value gap, it shifted market structure, and we have our clear narrative aiming for lower prices. Also, you see this fair value gap here. When price broke down below this swing low, these consecutive up candles are now a bearish order block. This is a fair value gap. Okay, so this bearish order block, this fair value gap here, this high can also be considered a intermediate term high if we're going to see lower prices, because now this is an order block, this is a fair value gap. Intermediate term high because it ran into the fair value gap. Intermediate term high because it ran into the fair value gap. Intermediate term high because it ran into the daily fair value gap. Okay, and then it showed rejection. Shifts in market structure here, 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 right here as well. And then this was the final one. Boom, it ended up breaking through that, and it was go time from there. Okay, so I hope that makes sense. I hope that makes crystal clear sense in regards to why I wanted to take the sells and basically what I was targeting and the narrative on that daily chart. But if anything is unclear, right, just please let me know. Also, definitely reference the the video that goes along to this as well, so you can kind of see everything in the moment and basically verify exactly what I'm saying. in regards to it being the logic that I ended up using. But yeah, I really hope this makes sense. If there's any piece of this video that doesn't make sense to you, or it's difficult, please let me know in the comments section, and I'd be happy to help you basically clear up any of those questions. As we always say though, I have the free Telegram you guys can join. I also have a private Discord channel for those of you that are interested in that kind of thing and want a personalized approach, or personal mentor to help you out. But if anything, you guys can just use this YouTube channel for a lot of value, as well as the Telegram. There's a lot in there, alongside any of the teachings that we learn from ICT as well. Okay. But yeah, we're always here to help in any way possible. But if you guys want to work with us, there's those options there. And essentially, like I said, just let me know in the comments if there's any specific pieces to this video that didn't quite click or is seeming kind of complicated. Okay. So one last thing I want to leave you guys with. First let's go back and kind of look. So from up here, filled the daily fair value gap, ended up selling off. There's a shift in market structure, shift in market structure, shift in market structure. Low is here, shift in market structure. Okay, and then this final shift in market structure after we've seen this and classified this as an intermediate term high. This target down here would have been the first initial target, and then the 13,000 area, right, which was down here, which, like I said, was right before the equal lows would have gotten taken on the higher time frame. Okay, so there's a low here, and there's a low all the way over there as well to the left. Well, I showed you guys in the beginning of the video. But yeah, so that's why the targets were what they were. Once price, well, this is going to be kind of good for you guys to kind of understand. Once price got from this high and broke this low, you can pull the fib from the high to the low and kind of get a a decent projection for like swing trades. Okay, so from this high to this low, once this low is violated right here, that's when you can start pulling that out from the high to the low, this fib, and kind of start anticipating where price could potentially run to, from that point of in time. Okay, so watch it. See, and precision. Look at that. You see, came within a couple points of this 100 extension. Okay, that's a very, very useful targeting method, right? Like that. After it ran these lows, showed heavy rejection higher. What did it do? Came back and touched this fair value gap and then continued to rally up. Outside of the kill zone, but it is what it is, right? And now we are right here. Okay, so now we're right here, right? So this leg lower, once this low is broken, that is how you could have anticipated a potential range for us to reach into the 100 extension. And yeah, there, it is what it is, right? Oh, here's my executions that I took. It finally popped up, by the way. All right. So my first execution was there at the area where I told you guys. See, 13,458 right there. And I took partials here. After these lows got taken, I took partials here as well. And then as price dumped lower, I ended up taking my full position right here. Am I upset that I missed all of this and already had my targets understood? Absolutely not, because my game plan is I want to take 50 to 100 points, and I'm cool with that. Okay, so this right here was over 278 points. All right, who wouldn't be satisfied with that? Don't be greedy, because that's one of the easiest ways to get overconfident, and then your overconfidence will lead to shitty decisions and just making mistakes that you wouldn't make otherwise if you just kept your composure and focus on the process, right? But yeah, so I hope that made sense, guys. I hope that you guys pulled some value out of this. Like I said, if you guys need any help or anything like that, just let me know. in the comments. If you guys have any videos, you want me to dive into, or any topics you want me to touch on, as always, feel free to let me know. Yeah, with that being said, you guys, I hope you got some value, and I will talk to y'all in the next one.
Yeah, this a hit right here, Zay.